The U.S. markets are currently closed for the weekend. We are looking at BigBear.ai, ticker BBAI, which finished Friday's session October 24th, 2025, at a closing price of $7.55. Now, on the surface, that looks like a positive day, closing up 4.06% from Thursday's close. But that number is deeply misleading. The real story of Friday's trading session is one of significant weakness and potential distribution. BBAI opened higher at 710, quickly spiked to a high of 733, and then proceeded to bleed out for the rest of the day, closing just pennies off its session low of 702. This price action, a failure to hold gains and a close near the low, is a worrying sign. What makes it critical is the volume. Over 293 million shares changed hands. That is nearly triple the 3-month average volume. When you see a stock fade all day on massive volume, it suggests that long-term holders or institutions might be using the retail excitement to quietly head for the exits. The general expectation for BBAI, the narrative you hear everywhere, is that this is the next major AI defense player. It's often called a mini Palantir, a company poised to capture a massive slice of government spending on artificial intelligence, particularly with the new OB3, One Big Beautiful Bill, funding initiative pushing billions into the Department of Defense and Homeland Security. This belief has been fueled by a non-stop stream of press releases, a partnership with T-Second to create battlefield edge AI systems, a new biometric veriScan deployment at Chicago O'Hare International Airport, and even a high-profile partnership with the Washington Commanders. This narrative has been incredibly effective. The stock is up over 300% in the past year. If you got in early, you are sitting on impressive gains, the kind of gains people dream of when they first start their online investing on platforms like the Robinhood app or SoFi Invest. But this is where the expectation and the reality violently diverge. The reality of BigBear.ai, when you look past the headlines and at the actual filings, is that of a company struggling deeply with execution. The expectation is growth, but the reality is that second quarter revenue declined 18% year over year. The expectation is that contracts are flowing, but the reality is that management cut their full year 2025 revenue guidance significantly, from a high of around $155 million down to a range of $125 million to $140 million. They also completely withdrew their profit targets for the year. The company is nowhere near profitability. While it posted a huge net loss of $228.6 million in Q2, much of that was due to one-time charges. However, the adjusted EBITDA was still negative $8.5 million. This is not the financial profile of a high-growth company. It's the profile of a company burning cash while its sales shrink. This creates an extraordinary tension. The market is valuing BBAI at roughly 17.9 times its forward sales. That is an extreme premium, far higher than the tech sector average of around 7x. This stock is priced for perfection, for explosive growth that simply is not happening right now. This brings us back to the recent trading activity. That massive 293 million share volume day on Friday wasn't happening in a vacuum. The stock had already spiked 22% earlier in October on that T-Second defense AI deal. It seems very likely that traders who bought that news are now selling into the strength, taking profits before the company has to actually report its numbers. The next major event is the Q3 earnings report, scheduled for November 10th, 2025. This is the moment of truth. Friday's action looks like a massive unwinding of positions ahead of that report. The options market is telling a similar story of extreme speculation. The open interest is huge on out-of-the-money calls, with thousands of contracts betting on a move to $9 or higher. But there is also significant volume and open interest building in the 7 and 6 puts. This is a classic volatility setup, where traders are buying lottery tickets in both directions, anticipating a massive move. They just don't know if it's up or down. This is not the kind of stable investment you'd find in Fidelity mutual funds or a Schwab Intelligent Portfolios account. This is a high-stakes bet on a single binary event: earnings. For investors who are perhaps managing their own Fidelity IRAs or looking for investment help for self-investing, BBAI represents a major conundrum. You have a company with genuinely interesting technology. Its core business is providing mission-ready AI solutions. The veriScan biometric platform is real and being deployed at airports like Nashville and O'Hare to speed up international arrivals. Its Conductor OS and Shipyard AI platforms are directly targeted at the Department of Defense and naval manufacturing. The bull case rests entirely on the company's CEO, Kevin McLennan, the former acting secretary of Homeland Security. The belief is that his connections are the key to unlocking the $380 million contract backlog and, more importantly, securing the massive new funds from the OB3 legislation. The bulls see this as a long-term play, similar to how early investors viewed Tesla stock or Nvidia stock before their main products dominated the market. They are using their individual brokerage accounts, perhaps on the Fidelity mobile app or Interactive Brokers platform, to accumulate shares, believing the current financials are just noise before the inevitable ramp-up. But the bear case is just as compelling, and Friday's price action supports it. The bears see a company that is exceptionally good at issuing press releases, but terrible at converting them into revenue. They see the $380 million backlog not as a guarantee, but as a potential that the company has already shown its struggles on. They look at the 18% revenue decline and the pulled guidance as proof that the business model is broken. They see the extreme 17.9 times forward sales multiple as a bubble, inflated by retail traders on Robinhood and SoFi who are chasing a narrative without reading the balance sheet. The bears also point to the analyst consensus. While firms like H.C. Weingart maintain a buy rating, the average Wall Street price target is somewhere between $4.85 and $6. Think about that. The current closing price is $7.05. The professional analysts who cover this stock on average believe it is significantly overvalued and has 15 to 30% downside from here. This is a stark disconnect. It's rare to see a stock trading so far above its consensus price target. This suggests that the current price is being driven entirely by momentum and retail sentiment, not by fundamental analysis from institutional desks at places like Fidelity Wealth Management. So, what happens next? It all comes down to November 10th. This is the ultimate test of expectation versus reality. The expectation, the story, is that BBAI is an AI powerhouse with deep government connections about to hit an inflection point. The reality, so far, is that it's an unprofitable company with declining revenue and an unsustainable valuation. For the stock to justify 7, let alone move higher, management must do two things on that earnings call. First, they must show that the revenue decline has stopped and that sales are growing again, preferably sequentially and year over year. Second, they must reinstate guidance and raise it, showing that the new contracts from T-Second, SMX, and the airport deployments are translating into actual predictable income. If they can do that, the high short interest and speculative call buyers could trigger a massive squeeze, blowing past the 733 high from Friday. However, the risk is enormous. If BigBear.ai reports another quarter of declining revenue, or if they beat estimates slightly but fail to provide strong guidance for Q4 and 2026, this stock could collapse. The 17.9 sales multiple provides no support. A miss could easily send the stock down 30 to 50%, right back toward those analyst price targets of $5. This is not a stock for those looking for steady online investment options or what you'd find in Fidelity ETFs. This is a binary bet. Many traders are likely using platforms like Interactive Brokers, which are known for Interactive Brokers trading tools, to set complex stop losses or buy put protection, bracing for that volatility. This is not a stock you buy on your Robinhood app and forget about. With earnings coming up on November 10th, comment below. Do you think BigBear.ai will finally show revenue growth, or will they miss expectations again? In the end, the story of BigBear.ai is a perfect illustration of the current market. We have an expectation, a powerful narrative about AI and government spending that is so compelling it has driven the stock up hundreds of %. But we have a reality, a financial one, that is pointing in the exact opposite direction.